Hello everybody. So today I want to talk about stocks that stay flat for years versus their price to sales ratio that actually do not stay flat when you talk about a growth stock. So this is a concept that most of you are familiar with, but today's video will be very short, more of an evergreen video. So here's the idea. If you own a stock for say 12 months and the sales of that company, their sales have increased by 40% over the last 12 months. But the stock price itself has remained entirely the same. What does it mean? Does it mean the price of the stock is the same? And in fact, it doesn't. It means that the price of the stock on a price to sales ratio basis, right? Price to sales ratio basis, that stock has in fact just become 40% cheaper. And this is an important concept because we have a lot of stocks that have been flat for 18 months or 12 months because the market has disliked really a lot of small caps. But these stocks have had increases in sales. Everything gets better with time about these stocks. Everything gets better, but the stock stays flat. So if the stock stays flat, it's actually gotten cheaper relative to the underlying business. That's why if you have, say, a stock who has a quarter-over-quarter growth of, say, 10%, right, it makes sense. It makes sense for this stock to be up 10% on the day of announcement, if that makes some sense, right? And when you have stocks that report growth rates, 10% per quarter is considered very, very good. If it's 7-8% per quarter, you're close to my threshold. Whenever a stock reports a 7 or 8% increase in sales, really, assuming the price to sales ratio stays constant, which they do over a very long run, as long as the companies keep growing at the same pace, they should stay constant. You see compression in the price to sales towards the end of the growth of the company, but that's only if they haven't started another S-curve, right? If they keep adding S-curve on top of S-curves, you should have a price to sales of a company that's roughly constant. So assuming that price sales remains constant and the sales increase and the company reports 10% increase in sales a quarter and the stock doesn't move 10%, if it stays flat, the stock got 10% cheaper, right? It didn't stay at the same price. It stayed 10% cheaper. And the whole idea here, of course, is to look at these stocks based on the price to sales ratio. And the website that I want to recommend, that I always use, is Macro Trends, is the name of the website. It's called macrotrends.net. And you can type any of your favorite stock and it will chart the price of that stock on a price to sales basis. So this is an example for Tesla, for example. You can see that Tesla is, aside from the one dip they had, is pretty cheap right now. And historically, buying Tesla right now in November of 2023 at 8.2 times price to sales ratio, you're getting Tesla for, say, cheaper than you were getting it, say, in 2014, right? In 2014 and even in 2015, even in mid-2015. The price today is cheaper because it's trading at 8.2 times sales versus, go back to 2015, 8.2 times sales. And so, over time, you need to average this price to sales to really understand, in my view, the true value. The sales have a ratio that you apply to them to get roughly the true value of the stock. And so Tesla is cheap right now, but there are stocks that have been flat or that have been going down for a long time that are even cheaper. So let me show you another stock of mine, another favorite is StoneCo. So StoneCo has been pretty much flat-ish for a year and a half, going on 2 years. So if you look at the price, you see it's been, in early 2022, it was 11.70. And today, it is 10.37, but who knows? In 2 days, it might be 11.50. Who knows, right? So the stock has stayed flat for roughly a year and a half, more than a year and a half now. But you can see it's actually gotten twice cheaper, even though the price of the stock itself is $10 to $11, roughly the same. The price to sales ratio moved from a 3.2 to 1.6. So it's gotten twice as cheap But you wouldn't realize that the stock is twice as cheap, because when you just look at the stock price, it looks like it's the same price. And let me conclude this video. I'm not going to do them all, but I'll conclude this video with other stocks that I heavily cover on the channel. So this is another one of end phase. So end phase, of course, on a stock price basis, it's down quite a bit, but it is even more down on a price to sales ratio. It's got an even more of a deal on a price to sales ratio. Going back all the way to 2019, you're paying the same price as 2019 on end phase. So if these prices continue into the next year, you're getting into a 5-year low on end phase. Of course, if you look in 2019, the price was $9 versus $76, so it doesn't show that way, but the price does indeed get cheaper, the price to sell. The same is true for HIMS. HIMS is the cheapest stock you can get in the history of this company, right? Historically, it's traded at around 3 to 3.5, depending on how you look, like 3.3 right here, and now you get it at 2 times sales. So that's the cheapest this company has ever been. Here's another stock that I'm looking to get back in and do a full analysis on as soon as I have a lot of time. You can see, so the price here in 2019 was about $40 in late 2019, early 2020, but the price to sales ratio was 8. Now today the price is still about $40, but the price to sales ratio is a 2. So what does that mean? If you look at stock price, the price is the same. If you look at price to sell, the stock went from an 8 price to sell to a 2 price to sell. So this stock, C Limited, right, Southeast Asia Limited, this stock literally is 4 times cheaper today on a price to sales ratio. And so I like to add to stock that get ever cheaper on a price to sales. I don't like to pay for my stocks more on the price to sales, but if a stock sales increase by 50% in 1 year and the stock price increases by 50%, I'm comfortable paying 50% more because the business is 1 year older and has gained so many more sell increases, if that makes some sense. So I think this is an important concept to look at. Obviously, this was not investment advice. This is just a short video. I'm very busy this weekend. Just entertainment, no investment advice. Appreciate your likes, appreciate your subscribes, and have a wonderful day.